A domestic corporation that exists for any part of the tax year must file a corporate income tax return. That's true, even if it had zero income, zero expenses, or basically no activity. Bankruptcy doesn't get you out of filing either. On the EA exam, they love this in existence for any part of the year language because it overrides the instinct to think no income means no return. Most C corporations file Form 1120, but the exam will test whether you can spot when a different corporate return applies. Foreign corporations generally file Form 1120-F. Life insurance companies file Form 1120-L. Exempt, even if it's incorporated, you're usually in Form 990 territory, not Form 1120. The trick is matching the entity type to the right form. For timing, the general due date for Form 1120 is the 15th day of the 4th month after the end of the tax year. For a calendar year corporation, that's April 15th. If the corporation needs more time, it can request an automatic 6-month extension by filing Form 7004. Remember, the extension is for filing paperwork, not for paying tax. Payment is still due by the original deadline. Now the e-file mandate. Final regs expanded e-filing starting January 1, 2024. Corporations are required to e-file Form 1120, and the big trigger you'll see in questions is the 10 or more information returns rule. If the corporation is required to file 10 or more information returns total, it generally must file them electronically. The old asset threshold is gone, so small corporations can still be pulled into mandatory e-file. Apply it to a fact pattern. Suppose a corporation files 2 W-2s, 91099 MISC, and 71099 NEC. Don't overthink the mix. Add them up. That's 18 information returns, so electronic filing is required for those information returns. And under the updated rules, the corporation is also required to e-file its Form 1120. On the EA exam, the math is usually easy. The point is knowing what counts toward the threshold. One more exam angle: waivers. If e-filing creates undue hardship, the corporation can request a waiver. Questions may ask whether e-filing is always required. The better answer is usually required unless a waiver applies. So when you see a corporation that meets the 10 return trigger, your default is mandatory e-file, and then you check whether the fact pattern gives you a hardship exception. Ethan is the sole member of Harbor Bullion, LLC, and he's a professional dealer in collectible coins and precious metals. A customer buys 15 gold coins for $13,200. The customer pays $6,200 in cash, and the rest with a cashier's check for $7,000. What reporting obligation does Ethan have for this transaction? Think about it. He must file Form 8x300 within 15 days after the transaction. A trade or business that receives more than $10,000 in cash in one transaction or related transactions triggers Form 8300. The tempting wrong answer is just reported on Schedule C, but the cash reporting rule is separate. And for this rule, certain monetary instruments like a cashier's check can be treated as cash, so the total pushes him over $10,000. What is the deadline to file Form 5500, the annual return and report for an employee benefit plan? The options include different month after year-end rules, including a 15th day deadline and a last day deadline. Which one is correct? Think about it. The deadline is the last day of the 7th month after the end of the plan year. For a calendar year plan, that's July 31st. A common trap is picking the 15th day of the 7th month, because that sounds like other return due dates. But Form 5500 uses the last day of the 7th month rule.